Hello and welcome to the Cryptocurrency News Channel. Despite the big DeFi that continues to rise, on the options market, it shows that Ethereum traders are actually putting in puts instead of calls. A put is a bearish bet, a call is a bullish bet. So there's been two puts for every call recently. Now, I think some people are starting to hedge against DeFi and the slowdown of DeFi. Now, I do think DeFi will continue growing, but it will probably continue to grow at a slower pace sooner or later. The exponential increase in DeFi cannot continue, especially if the Ethereum fees are so high and the transaction times are so long. Also, if you look at it, other mainnets are growing and they're going to start building their own ecosystems. Sushi is going to move over onto Solana sooner or later. According to one trader, that reflects fears of a drop in prices led by a slump in decentralized finance. Much of Ethereum's growth has been due to decentralized finance. So Ether's put to call volume ratio, a measure of activity in put options relative to calls, rose to 2.45 on Wednesday. That is the highest level since October 31st, 2019, or almost a year ago. In other words, more than two put options were traded against every call option. That is a sign of a bearish market sentiment because more people are betting against Ethereum than betting for Ethereum. The message between the lines is likely that traders want a hedge against the activity in DeFi because most of DeFi has turned out to be a scam, which has been the primary driver for Ether prices. An options trader and founder of Polychain capital-backed derivatives exchange Alpha 5 told CoinDesk. Some commentators believe DeFi's staggering growth has become a price bubble and is unsustainable. That is pretty much 100% true. DeFi is a rerun of the 2008 asset-backed finance bubble on speed. That could be true as well, and we all know what happened in 2008. The space faces other issues too, such as congestion and soaring gas fees on Ethereum, resulting in heavy network usage by DeFi projects and stablecoins. In August, miners made over $110 million from fees, according to the data source Glassnode. And I know that fees have come down the last few days, but they can shoot up again at any time, and that is completely unsustainable. Alongside a general crypto market downturn, the total value locked in DeFi applications has declined sharply from $9.6 billion to $6.11 billion in the last 8 days, according to DeFi Pulse. Ether's price fell from $480 to $320 last week. However, investors expect deeper price drops, if any, to be short-lived because call options expiring in 3 to 6 months are still drawing higher prices than puts. So investors they might actually expect a short-term pullback, but I don't think it's long-term bearish, probably because of Ethereum 2.0 and other developments. But for right now, at least, there's more put options than call options, meaning that at least in the short term, the options traders do expect Ethereum to somewhat fall, or they want to just hedge their bets in case DeFi explodes, which is probably smart because DeFi has a propensity to explode at any given time with or without warning. So those of you who are catching on the DeFi craze, I don't think the bubble will necessarily pop anytime soon, but there are people actually betting against it, at least for a short-term pullback. So for those of you that are trading, looking for Ethereum, looking for DeFi, could be good information to actually take into account. Wouldn't let it dominate your trading, but it's something that you should actually keep in mind. So that is the news for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.